Welcome to The Explainer. Today, we're going to talk about the two emotions that basically run Wall Street and really your portfolio: fear and greed. Let's get right into it.
You know, if you've ever invested, you know this feeling. It's a total roller coaster, right? One minute you're on top of the world, feeling euphoric, like every single thing you touch turns to gold, and the next you're in a free fall of panic and despair. This is that predictable cycle, and that's exactly what we're going to unpack today.
And hey, it's not just us saying this. The legend himself, Warren Buffett, called fear and greed super contagious diseases. He said they're a permanent fixture in the market. So if you can understand them, you can start to build up a little bit of an immunity.
Okay, so let's get down to it. How do these powerful feelings actually turn into, well, actions? Actions that have a direct impact on your wallet and the choices you make with your money.
So you've got these two sides of the same coin. On one side, there's greed. That's that little voice in your head screaming, you have to chase that hot stock. Everyone's getting rich. It fuels this crazy overconfidence, a serious case of FOMO. But then you've got its opposite, fear. Fear is what makes you hit the panic button and sell everything during a dip. It's what makes you get paralyzed and completely miss out on amazing buying opportunities.
So this all leads to a really crucial question. What if you didn't have to just be a victim of these emotions? What if you could actually step back and measure them? Imagine looking at a dashboard that just shows you the mood of the entire market. How cool would that be?
Well, that's exactly where this tool comes in. It's called the Fear and Greed Index, and it was designed to do just that, give you a snapshot of what the market is feeling at any given moment.
The best way to think about it is like a thermometer for Wall Street. It takes 7 key market indicators, crunches them all together, and gives you a single reading that tells us if investors are getting way too bullish or if they're completely freaking out. It's like a pulse check on the market's collective gut feeling.
And the beauty of it is its simplicity. The scale just runs from 0 to 100. If the score is down near 0, investors are in a state of extreme fear. If it's creeping up toward 100, you guessed it, that's extreme greed. It's a quick, visual way to get a read on things.
So, how does this thing actually work? I mean, this score isn't just a wild guess. It's built on 7 key data points, 7 clues the market gives us. So let's break down exactly what the index is looking at.
First up, market momentum. This one's pretty straightforward. It just looks at the S&P 500 and asks, is it trading higher than its 125-day average? If that momentum is growing, that's a pretty clear signal of greed.
Second, stock price strength. This is basically a head count. Are more stocks hitting new 52-week highs than new lows? When you see way more highs than lows, that's greed talking loud and clear.
Third is stock price breadth. And this is all about the trading volume. When the stocks that are going up have a lot more volume, more power behind them than the ones going down, it signals greed. When that power weakens, fear might be creeping in.
Fourth, we look at the options market. Now, a put option is basically a bet that a stock will fall, and a call is a bet it will rise. When investors start buying way more puts than calls, it's a huge sign that they're getting nervous. That's fear.
Number 5 is the VIX. You've probably heard of this one. It's often called the market's fear gauge. The VIX measures expected volatility. So when it starts to spike, investors are bracing for some big price swings, which is a classic symptom of fear.
Sixth is safe haven demand. This is classic investor behavior. When people get scared, where do they run? To safety. So this clue checks if investors are ditching risky stocks for the safety of government bonds. If bonds are doing better than stocks, you can bet fear is driving the bus.
And finally, junk bond demand. This one really gauges the appetite for risk. When investors are feeling greedy and confident, they're much more willing to buy riskier, high-yield junk bonds. So higher demand for that stuff signals greed.
Okay, so we've got all the ingredients. Now for the big question. How do we actually put this thing to work? Because this isn't just some interesting number to look at. It can be a really powerful tool, especially if you're a contrarian investor.
And history really shows us the potential here. I mean, think about it. Back in 1999, this index was screaming extreme greed just before the dot-com bubble burst. And then in 2008, and again in 2020, it hit extreme fear almost exactly at the market bottoms, signaling some incredible buying opportunities.
Let's put some real numbers on this. During the dot-com bubble, the index was over 90, total greed. The crash that followed wiped out almost 78% of the Nasdaq's value. Now flip it. In the 2008 financial crisis, the index was practically at 0. That extreme fear was the signal of historic buying opportunity right before the market started its long climb back.
Okay, so this is all great information, but how do we actually apply it without just becoming a slave to another indicator? How do we build a truly disciplined strategy?
All right, here's a simple framework. First, you have to just recognize your own emotional biases. We all have them. Second, use this index as a weather vane for the market, not a crystal ball. It tells you what sentiment is, but not always why. That's why step 3 is so important. You have to combine these signals with your own research. And finally, number 4, no matter what, you have to stick to your long-term plan.
Look, at the end of the day, it all comes down to discipline. Making decisions based on emotion is what holds most investors back. But if you understand that these forces of fear and greed are predictable, you can use a tool like this index as an alert system for your own biases. And that emotional discipline, that's what creates long-term success.
And that brings us full circle, right back to Buffett's timeless advice. This isn't just some clever thing to say. It's a whole strategic framework. The best opportunities are very often found when you have the courage to go against what the crowd is doing.
So I'll leave you with this question to think about. The market's mood is always going to swing back and forth, but now you know there's a way to measure it. So the choice is really yours. Are you going to get swept away by the emotional tide? Or are you going to use it to navigate your way to your goals?